Let me start with a statement that will sound comforting and should terrify you. Every time volatility collapses, investors feel safer. Every time the VIX falls below 14, the narrative becomes the storm has passed, and every time without exception, risk quietly re-enters the system. Today's chart does not show optimism, it shows conditioning. Because what you're looking at is not a bullish signals in isolation, it is a cycle, and cycles always end. At the top, you see the S&P 500, obviously, climbing steadily over decades. Below, the VIX, American fear gauge, spiking violently during the stress, and then collapsing. The study isolates moment when the VIX falls from above 26 to below 14.5 within 3 months. This matters. A VIX above 26 represents panic. A VIX above 26 represents panic. Below 14.5, it represents complacency. This is not a normal decline in volatility. This is a fear being aggressively crushed. And every time this happens, the market behaves in a disturbing, consistent way. Let's talk about what happened after volatility collapses. 1 week later, on average, markets are up. 2 weeks later, up again. 1 month later, up again. 9 months, up every single time in the data set. 1 year later, again, 100% positive outcome historically. And that's a trap. Because investors are trained to extrapolate returns, not risk. People are focusing on return. And this is why I want you to join this channel, because what I do is I really trying to identify the risk in the system. Not telling you which stock is going to go up next. Nobody knows that, but I could tell you risk is there. Look closer. Now, let's shift your attention to the final column. Maximum drawdowns within 1 year. This is the price paid for complacency. While markets often finish higher after volatility collapses, they frequently experience violent interim losses, double-digit drawdown, sudden air pockets, liquidity shocks. This is not stability. This is suppressed volatility snapping back. The market is calm not because risk is gone, but because it has been temporarily anesthetized. What does this pattern repeat? Well, because volatility is not just fear, it's price discovery. Where's the risk? Option sellers dominate. Systemic strategies lever up. Risk parity increases exposure. Volatility targeting funds de-risk and re-risk automatically. The entire market structure becomes long gamma, long leverage, and short uncertainty until something breaks. And when volatility returns, it doesn't trickle back. It re-enters violently. Investors make the same mistake every single cycle. They interpret low volatility as safety. Oh, the VIX is low, so everything is safe. No, low volatility is fragility. Think of it next time. Low volatility is fragility. The absence of turbulence does not mean the plane is safe. It only means that often means that the engines are running harder than you realize. The VIX collapsing from panic to complacency is not a signal to relax. It is a signal that risk is being mispriced again. Look at where we are today. Volatility has once again collapsed. The markets are confident, right? Can't lose. Narratives are clean and positioning is grounded. This is not a warning of an immediate crash. This is not about this. This isn't how this works. This is a warning that future volatility is being stored, not eliminated. Every calm regime plants the seed of the next shock. Professionals do not read this chart and say, hey, buy aggressively. They say, tighten risk controls, reduce leverage, expect drawdowns. Maybe it's time to start buying some options. And if you join my Patreon channel, I will show you how to do it. I will explain to you how to do it. There's many ways for you to hedge yourself in this market, because the danger is not the direction of the market. It is the speed when volatility returns. So remember this: when when the VIX collapses, markets don't become safer; they become more brittle. Returns may still come, but the margin for error disappears. This chart is not bullish; it is conditional, and conditions always change. If you understand volatility, you don't fear it; you fear its absence.